All right, so understanding that indicators are basic stuffs that actually do help you, number one, maximize a winning trade. Make sure you're writing these things down. Number one, they actually help you maximize a winning trade. Number two, they also help you understand the point at which you want to take your entries from and also where you want to take your exits from. Okay, so it helps you to identify where you want to take your entries from, also where you want to take your exits from. Or another thing, it also acts as a confluence. You understand? As a confluence to your trading strategy. Okay, so when you're developing a trading strategy, you have to understand that being able to also pay attention to certain things like the indicators in the market, which is technical indicators precisely, they can actually help or foster your decision making as well as your trading analysis and just help you overall in your trading journey. So when it comes to indicators, we have different types of indicators. Okay, the one I use mainly are these three. Okay, so I use the fair value gap, FAIR, fair value gap, and I also use the what's this other one? Okay, yeah. All right, so I also make use of the come. Let me just go show you the chart. So see there. I also make use of a fair value gap. The majority of the business I use are fair value gap. I use fair value gap mostly, so that's why I can't forget that. I use fair value gap mostly. And then, okay, so I also use the relative strength index, which is the RSI, and then I also use
Yes.
one that I am still working on. I'm still building a very good and a solid um, figure for that, and which is called the which is literally called the SMA, EMA, and so on and so forth. Okay, so if you check out indicators, you can just if you check out personal or technicals, you can see a lot of them. So you can see 24-hour volume, accumulation, distribution, advanced days, blah 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 blah, balance of power, WEMA, ease of movement, envelope, Fisher transform, gaps, blah 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 blah. You can see relative volume, relative flow, but I pay attention to relative strength index, which is RSI. I pay attention to also the what's it called now? I also pay attention to the fair value gap because of course these indicators actually have high winning rates compared to others that I've tried out. Okay. And the other one I'm also currently working on is the EMAs, okay? EMA. So I'm still trying to look at it, but I don't want to bombard you guys with all this information just yet. So let's just go straight to what we have as regards the indicator. So I'll just take you guys through fair value gap today, and then tomorrow we'll talk about relative strength index. Next tomorrow we'll consider the rest of them. Okay. So I hope I've not taken these things with you guys before. Have I? Have I taken this with you before? I'm not sure I've taken this with you before. Have I?
I have
Okay.
not.
All right, good. Good. So I have it. So now let's look at the fair value gap. Now, the fair value gap is built as a result of the imbalance in the market. You understand? The imbalance in the market is actually told by the candlestick formation. Okay, I think everyone knows that the candlesticks actually tell stories. Okay, so when we say fair value gap, when we say fair value gap, you have to understand that it is an indicator that identify the gaps in price movement. So which actually is as a result of imbalance. Do you understand? So when we have imbalance in the market, it definitely gives us the ability to know that okay, this imbalance has actually happened in this market. Then we can see that price might actually come back and tap into such zones. And then when price taps into such imbalance or such zones, then we can have reactions of it. Do you understand? We can have reactions of it. So if you look at the fair value gap now, also before we continue to just go ahead and start look at it on the chart, let's also just talk about how it works. Okay. Now it also helps traders to just spot, like I said, imbalance in the market. and then it gives you the ability imbalance in the sense that you be able to understand when the buying and selling are not actually equal. Do you understand? When when buyers and sellers are not actually on the same path of understanding that like there is no agreement between them. Do you understand? Now, the fair value gap indicator shows area on the chart where the price lacks continuity. First thing first, understand that it actually shows areas on the chart where the price lacks continuity. Now, another thing you want to pay attention to is these gaps are created when there's an imbalance, like I said, between buyers and sellers. Okay, it's actually as a result of imbalance between buyers and sellers, which can lead to rapid price movement. So once there's an imbalance between buyers and sellers, something happens, which the price will just move in a rapid form. Do you understand? Then now, it also as well as it's moving in that rapid movement, right? When it's actually moving that way, it then go ahead to create what a gap. Okay. Now this gap is now a vacuum for traders to be able to look out for, to be able to take positions in there. Okay, which can attract the price. Of course, these vacuums when they are actually created, they tend to attract the price back to it. Now I don't take them as vacuums. I take them as a rectangle that gets formed because this indicator will help you spot out zones automatically on the chart that price might reverse into, and then you see the push that will actually happen when price reverse back into that zone. So if you go to TradingView right now, we will see that if you go to our indicators here at the top, indicators, you see fair value gap. Once you tap on fair value gap, a lot of things just pop up on your chart. Good. Now, as you can see here, you can see that these red things just pop up. Can you see those red things just pop up? Let me add my favorites.
Yes.
Let me, can you see? Can you see those
Yes, I
red lines?
can.
Good. Now let's remove everything from the chart. Let's make the chart as clean as possible. Okay. So now we can see if we turn it on, turn it off, turn it on, you can see the red. This is actually printed out on the chart. You can see this red, 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 blah 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 blah, and so on and so forth. Now, these are the most recent, okay, because you can see them on the 1 hour time frame, and then you can be able to just use them for your opportunity. Now, when you, it is advisable that you use them majorly on the hour time frame, okay? Don't use them for from the 15 minutes or lesser, okay? Because when you go to the 15 minutes, there's a whole lot of information there. There's a whole lot of candlesticks there. There's a whole lot of things happening there, okay? So, but then again, you can also use it just to get certain precisions. But most of all, you can also use it basically on the hourly time frame. So when we have the 1 hour time frame, then we can see that we have this box drawn red, 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 red. Now, when you see a red fair value gap, it means that if price taps into the zone, there is every tendency of price pulling out of that zone. Does that make sense? So, and like I said, it is as a result of imbalance and rapid movement in the markets. Now, if you look at this now, like I said, the candlestick tells the story, right? So the imbalance we are talking about is something like this, where we see a candlestick form. This particular wick is here. Then there's this candlestick that forms in between these two candlesticks. You see, this one formed first, this one formed, went very large. Do you see that? Then the next one formed again, created a little bit of wick, then boom to the downside. Now the distance between this wick and this previous candlestick wick is where the imbalance occurred. Do you see that? Is where the imbalance occurred. Now, if you observe what is currently happening on the chart, that is where price is currently what? Price is currently finding it hard to break above. Do you see that? Price is currently finding it hard to do what? To break above this fair value gap on the hourly time frame. Does that make sense? Does that make sense? Are you guys there? Hello?
Yes, I'm with you. I'm with you.
All right, good. So now, these imbalances are basically what you pay attention to. And then, like I said, the time frame for you to actually pay attention to them more is on the for 1 hour and 4 hours above. Now you can also pay attention to them on the 15 minutes, okay? Because on the 15 minutes they tend to be smaller and they tend to be more detailed, okay? Now you can see that this one actually formed here, and then there was an imbalance as well here. There's an imbalance here, but it got broken due to price movement. Due to price movement. Does this indicator signifies the almighty act to trading? No, it doesn't. This is actually an imbalance. There's an imbalance in this zone here. There's an imbalance here. Now, once price shoots above a particular imbalance for a very long period of time, like this now, price got for a very long peep, I mean precisely, price shot out of this particular imbalance I just drew that is out already for like you can see 50 pips, automatically the imbalance is rendered useless, okay? But if you see this one now that is rendered that is still showing, okay, you can see that.
Daniel, please, can you come again?
All right. So now what I'm saying is I'm currently on the 15 minutes time frame. Do you understand? Now, on the 15 minutes time frame, we can see that the imbalance is very small here. Okay. Now, the imbalance is small, but then again, I can see based off what I said the imbalance occur as a result of two candlesticks. Okay. You have one candlestick, you have another candlestick that forms in between them, and we have another candlestick like this. Here we now have this particular. I'm trying to draw a wick now for this particular candlestick. Yeah. Okay. Tell me, guys. Um, so now we now see that this particular candlestick form, then this particular candlestick form, then this particular candlestick form. Now the distance between this particular one here and this particular one down here is where that imbalance results from. Okay, this is the imbalance here. Imbalance. You see, that is where we can see an imbalance. Okay, now it could be possible that this particular candlestick is very long and this one is also long. It's also possible like that. Okay, it doesn't matter what structure it is. What does matter is there a distance between this candlestick and the next candlestick that actually formed after a very long move actually happened in between them? Okay, now if we come to the charts now, you can see that this particular red one that is currently showing is as a result of this particular what's it called now? As a result of this particular candlestick, which stopped here, okay, then there's a candlestick in between that actually went this far. Then the next one came out, okay. Now you can see that there is a distance between this particular one and this particular one. Does that make sense? If you look at this one now, look at this candlestick. Do you see the wick? Is there a distance between this one and this one? Is there a distance between this one and this one? Hello, is there any gap between this one and this one? Is there any gap?
No, no.
Do you see that? So then we can see that there's a gap
No,
between
no.
this one, all right, and this one. So that actually gives us the imbalance. One. Now pay attention. Now, do you see a gap between this one, this particular candlestick, and this one? Do you see a gap here?
No.
Do you see a gap here? This one and this one. Do you see a
Yes.
gap? There's a gap there. Do
Yes.
you see the gap?
Yes.
Good. So now that gap actually signified a fair value gap. So there was a fair value gap here before. there was a large fair value gap here before. Okay, there's a fair value gap here before. Now, the fact that there was a fair value gap there before is going to make me explain to you that sometimes the imbalance can actually be what? Be broken. Do you understand? Price can break out of it and price can ignore it and price will go as if it's not even saying it. Do you understand? Which is what happened to the particular one here. You cannot see it on the chart again because price already went far above it. Okay, so what I was explaining was that if price go above a fair value gap over like 50 pips, 30 pips, 50 pips above, 50 pips above, the fair value gap becomes what? Invalidated. You understand? The fair value gap becomes useless. The reason why you can still see this one here is because price has not gone above it 50 pips. Okay, so if you look at the top here, to this point here, we can see that it's just 23 pips. So price has not gone above it. So this fair value gap is still valid and it can still influence price in the future. Okay. If you draw your box to the future, if price still comes into this box, price will still find hesitation. Okay. Which was what happened. Immediately price tapped into this point. What happened? The fair value gap actually pushed it down, which tells us that there was an imbalance here at this particular point in time. This particular imbalance formed as at 10 o'clock this morning, which is 11 o'clock Nigerian time, and the retest came about around 3:15, which is around 4:15 in Nigerian time. Does that make sense? Does it make sense?
Yes. Yes. Yes.
So it's very important to understand that this fair value gap can actually influence your trading decisions and so on and so forth. So if you are actually on a buy opportunity and then you see price coming to a fair value gap, okay, let me ask you a question, very very simple question to tell you if you're able to see this even if the market don't point it. You have to be able to see it even if the market don't point it. Do you see that there's a gap here? Do you see that gap? There's a fair value gap there. You can see this particular week here, then this week here. Do you see that? So then this is the gap. This is the imbalance there. Can you see the imbalance? This is the imbalance. Now the fact that there's this
Yes.
imbalance
Yes.
give us that gap. Now this gap will not be red. Why did I say it's not going to be red? It will be green because what we've seen here is price actually creating it, and then there's a what? There's a bullish imbalance. The imbalance is what? Is bullish, is green. Do you understand? This imbalance is what? Is bearish, is red. This imbalance is red. Do you see that? This imbalance is red.
Yes.
This imbalance is red. Do you see that? This imbalance, it can be tiny as this. You can see how tiny it is. Just this week, not closing
Mm.
slightly to this point. It's just closing here. You see, to this point is an imbalance immediately. You can see this
Yes.
imbalance that happened here. This imbalance
So
happened here.
the red and the red mix together, Abby.
What is it?
Is that what you're
You said
trying
what?
to say?
You said what?
The red
Yeah.
is going to be the red and the red imbalance, Abby.
Yes, the red bearish imbalance as results from a bearish candlestick, which is like, oh, you understand? Bearish imbalance equals to
Okay.
bearish fair value gap. Okay, so when we have a red
Okay.
imbalance, then we have a red fair value gap. If price comes back into that fair value gap, what will happen? Price should drop. Do you understand? If price come back into that fair value gap, what should happen?
Yes.
Price should drop. You can see it immediately. Price tap into the fair value gap. What happens? Boom, shut down. You see that? Shut down immediately.
Oh.
You can see
Yes.
price passed into it, shut down immediately. You see? So each time price comes back into a fair value gap that is red, it automatically signifies what? A bearish move. When it is green, it signifies what? A bullish move. Okay?
Mm-hmm.
Now I'm not seeing any green. There's no green forming right now. There's no green forming, no significant green forming. And then see. So let's take out some other pairs. It works on every pair. Every pair. It works on gold, works on BTC, works on every pair. Okay, it's an indicator that you can use anytime, any day, and so on and so forth. So I had stop loss on gold today. The SAT. All right. So then, right then we have, you can see this fair value gap forming as a result of this imbalance. Can you see that?
Yes.
So inventory price tapped into it. What happened? Dropped. Do you see that? Inventory price tapped
Yes.
into it. It dropped. So which was where I got my first stop this morning. There I got my first stop. Yes, I'm looking for a green one that we can use. Okay, I see an
Oh,
imbalance
wait, I
here.
want to ask a question. I want to understand something. Is it
All right,
immediately the price tap into the imbalance, the thing is going to like drop?
that's if it's a bearish one. Yes.
Okay.
Look at this one now. This particular one is an imbalance. Can you see? It's an imbalance. It's
Mm,
a gap. You can see now, but this one is bearish. Why is it bearish? Because the candlestick that actually resulted in the imbalance is what is bullish. I mean, you can see why is it bullish? It's
yes.
because the candlestick that actually resulted in the imbalance is bullish. Do you see? So initial price tapped into it. What happened? It reversed. Do you see that? So if you had bought somewhere here, you'd have made enough profit for yourself. Do you see that? Does that make sense?
Network is not good. Can you hear me?
Yes, I can hear you. I can hear you. I can hear you louder.
Let me call you.
So this imbalance is a very important thing you pay attention to. And then I'm looking for a bullish one actually. Let me look at USD GateY. Good. Can you see a bullish imbalance here? Bullish imbalance. You can see it will be green when it is bullish. Do you see that? It will be green. It will be red when it
Mm-hmm.
is bearish. You see? It will be red when it is bearish. Maybe price tap into it, you see rejections of it. Okay.
Wait, I can't see it though. Oh, sorry.
Can you see it here? Can you see the green ones?
Yes.
Sometimes price can just come very close, then it will reject. Can you see this one? It just came, price just reverse a little bit to this point. As it just came like this, boom, it just rejects. Do you see that? This week showed rejection.
Yes.
You understand? Initial price just came close to it.
Yes.
You can see that. So this the imbalance is as a result of this one and this one and this one and this one. So as tiny, the distance can be very tiny, but it is significant. Does that make sense?
Mm. So the red now, immediately the red taps on the imbalance now.
It pushes down. That's what is currently happening here. Can you see that that's what's currently happening in the USD? You can see that this particular imbalance formed as a result of this candlestick here. It formed as a
Yes.
result of this candlestick here and this green one, have you?
Yes.
The price tap
Yes.
into it a little, and you can see it's pushing down again. Now, if price come into this one,
Okay.
it's expected to do what? Push up again. Can you see that?
Go up.
And price this point, it's
Yes.
expected to push up again.
Yes. Yes. Yes.
Look, like look at this tiny one. Can you see this tiny one? Can you see how tiny this one is? Very tiny. But you can see that even when price came back to it again, what happened? It pushed up. This was
It pushed
actually
up.
around this was formed Monday
Okay.
around 1:45.
So
Okay.
I want to understand something now. Once there's
Yeah.
like a green line, if a red light
Mhm.
tap into it, it's going to come down.
If there is a red, if there's a red box, which is a red fair value gap, if
Line
price
that taps
taps
into the
into it,
green one.
it will drop. If it's a green one, if it's a cell that's currently entering a green one, we should expect it to push.
Yes.
Do you understand? Up.
Yes.
So you
Yes.
can see that's what happened here. This particular tiny one happened 130. Then we can see that this red candlestick entered, price pushed up a little bit, then price pushed up
Okay.
again, came down again. The price tried to go below,
Mm,
the price pushed up back again because of that fair value gap. You can see that fair value gap.
mm, mm, mm.
That fair value gap can be added to your lines. It can be added to your support and resistance. It can be added to your other strategies that you can see this red one now. This particular one happened formed fully um, Monday around 4 o'clock in the morning, and then um, around 9:15 when price tapped into it again. What happened? We saw the drop, massive drop. You can see that a massive drop. I hope that makes sense.
Yes, yes.
Yeah. So it seems the network is bad for a lot of people.
Version 9 is network is not working. And this one is success is not good.
All right, so bye. Yeah, I'm going to send the link. So now I hope we all understand how this fair value gap works. You have to be able to see it. You have to be able to
Yes.
put your eyes on the chart. You have to spend time on the chart, analyze it, and be able to try it, turn it on on your trading view, so you'll be able to see it anytime you are trading. Okay. Sometimes you can put it off if you have mastered it enough. I've mastered it enough, so sometimes I don't need to put it on my chart before I see it. Okay. And sometimes if
Mm.
you have multiple screens, you can have like for adventure if you become a full-time trader and you have multiple screens. You can have one screen for indicators, one screen for a clean chart, and one screen for execution. So it's just a big dream stuff. So, anyways, so without any further ado, I hope this particular thing makes sense. Also, I also want to bring to our notice that we'll be having an exam. Okay, we'll be having an exam on Friday. There'll be an exam basically, but everything about you, and so on and so forth. So this exam
This
will do it
Friday.
at your own space. You do it at your own time whenever you're free. I mean, I'll just send you the question. There'll be a time limit, of course, and then that was whatever you actually get through that exam is just going to guarantee us actually getting to give you a certificate which actually certify you that you actually did well. You actually did learn and understand every basic thing a beginner should understand in the forex space. So just be a month prepared and then go through everything I've taught you. If you have question, ask me. Trend lines, know how to draw trend lines, know how to draw your support and resistance, know how to mark out, candlestick patterns, know how to identify a trend, know how to, I've taught you guys basic things that I should know. So, know how to cite a bearish engulfing, a bullish engulfing, understand the difference between chart patterns and candlestick confirmations, as well as, one of my students just asked me that question yesterday, and I was surprised. I thought a lot of people know that candlestick patterns is different from chart patterns, is also different from candlestick confirmations. Okay, candlestick patterns, chart patterns, and candlestick confirmations are different. Okay, it can actually happen in different ways. You can use the candlestick to confirm momentum, which was what I used to catch like 170 pips on BTC today. You can use that was the idea I just used. I just saw the momentum of the candlestick. It was selling at the point, and then towards 10 minutes to the end of that 15 minutes candlestick, started pushing up. As it was pushing up, I automatically understand that what the buyers are currently in this market and it's time for me to make money. And I just entered, I just layered in I wanted the 100k to 20 million guys to enter, but I was I was scared because when it's New York session on BTC, it is very volatile in the sense that the money you can make and the money you can lose is very crazy. You can make 100,000 naira with 0.01 lot size. I'm telling you, and you can lose that whole account with 0.01 lot size during New York session. So it's very deadly if one don't pay attention. And then that's why most of the signals I send to the signal room during the New York session, I don't send it to the this of course during that time, the spread of the bid and ask price that you see, that thing that moves on MT5 that moves is very tight. So that spread is very tight. And the fact that that spread is very tight, it means that what there's a lot of volatility in the market, and then the market is expensive to trade. Expensive, very expensive to trade. So if you don't have enough capital, enough liquidity, the market can just kick you out. But it doesn't happen on Euro USD. It's just basically volatile pairs like gold and BTC USD. But during London session, which is the morning, and then I hope we all understand what sessions are. We have different sessions, right? I hope everybody know that we have different sessions. We have the Asian session, we have the London session, and we have the New York session. Okay, Asian session is in the midnight, London session is in the morning, then we have the New York session, which is in the afternoon to the next midnight, then so on and so forth. Okay, Asian session pick up again, then London session. Then you can also have an indicator that shows you that. Okay, I have an indicator that shows me that. You can see I have trading session by Sonalab. So Sonalab actually has this indicator that help you to be able to just identify different sessions at which you're trading in. So if you pay attention now, you will see, let me make this particular thing more more brighter. So you can see that particular yellow and blah 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 that just came up on the chart. So BG color, let's include it. Okay, good. So you can see that's London session. I hope you can see that. So every move that happened there happened during London session. Then you can see the the Asian session being displayed there with the purple, or what color is that? Pink, right? Pink. Let me see. The Asian session, which is the pink here. Good. Can you see that? So if you look at it now, you will see the name above. You see Asian, you see London. This yellow one is New York. Okay, let me change the color of that yellow one. The yellow one is New York. So there are times at which they overlap each other at some point. So you can also understand that you can be trading multiple sessions at the same time. Okay, you can be trading multiple sessions at the same time. Let me change the color of that. So I'm trading multiple sessions at the same time. You can be trading just like an overlap. Okay, so you can see here London session overlapping on Asian session, New York session overlapping on London session. So I can ask you a question that which of these overlaps has longer time? Looking at this now, you can see the one that has longer time. I don't need to break it down for you, right? Do you understand? I don't need to break it down. Looking at this chart now, you can see the one that actually has longer time spent in it. You can see the amount of candlesticks that is formed here in this particular place here. It is lesser compared to the candlestick that is formed in the overlap of what, of the New York and the London session. Okay, so then I can also ask you which session lasts longer. I can also ask you which session lasts longer. Then you just have to just look at the chart. Which of these sessions lasts longer alone? You will see that it's the midnight. The midnight has more what? More candlesticks in it. Can you see? Singularly, the midnight has more candlestick in it. Can you see? Whereas we can now see just this particular move in the overlap, but the London session singularly has just this particular candlestick. Can you see that? Then the New York session has this particular candlestick. So my question can be that which of these sessions actually has more candlesticks that has a longer time frame that is actually spent in it, and so on and so forth. Then you should be able to just you should be able to answer based off of what I just explained right now. I hope that makes sense. I hope everyone is hearing me. I hope everyone is hearing me. Does that make
Yes,
sense?
yes, yes.
So now the next thing is understanding trading journaling. Now, while you are trading, while you're taking signals, while you're doing whatever you're doing, you want to understand that writing these things down are very, very essential. I mean, I can't overemphasize on how important this thing is. Okay, and somebody just posted something. Let me go ahead and check out that post. I want to share with you guys today. It's very important we stay motivated, we stay, you know, um, so he said, I just want to let you know that without a trading journal, you are not making any progress. You understand? For you to be able to make progress, for you to be able to understand this thing very, very well, you have to spend hours on the chart. It's just like your schoolwork, right? I'm telling you, it's just like your schoolwork. But this one is more practical. This one is more every day here is a test day. Every day here you'll be tested. Every day here is like an exam day because you either fail or you pass immediately. You are seeing your result. You understand? You either make money or you lose money immediately. You are seeing your result. So you have to understand that you want to journal everything, every decision you're making. I have a trading journal. I journal everything. I have it. I actually have it as a Notion pad, on my system here, where I actually write down everything that happens. And I also have a virtual assistant currently that also help me with what with journaling every decision I'm making and reasons why I'm making this decision and so on and so forth. So peradventure I make mistakes or stuff, I can easily go back to this journal and then I can see my mistakes and then be able to use them so that I will not make further mistakes later on. Okay. Now I know I'm making a lot of mistakes right now. I know a lot of people will still come for me, but uh, it's part of the trading thing. It's part of the journey because we've been hitting stop loss like back to back. Throughout last week, so it's just all stop loss, all stop loss, all stop loss, all stop loss, and then today we had stop loss in the morning, and then this afternoon we had BTC 170 pips, then gold minus like 130 pips, almost collected the profit we made back from BTC, and then right now I'm currently on break even on my accounts, and then I'm just up and down here. So, do you guys have any question for me?
So Daniel, I wanted to ask, after we write the exam on Friday, like, are we done with classes?
Yes, actually,
I thought
the
you said
classes.
ending of the month.
Nah, nah, nah. The rest will just be basically for the shoot we have with you, and then I think that's just going to be.
Daniel, when did I start class? I was to write exam on Friday or January this thing.
You started classes last year, no?
No, no, last year is not far away. I started class ending of November and
Yeah,
December.
it's
We didn't
actually.
have classes for like a particular period for the break. And I was like, okay, we said January. And now you're saying you are behaving like classicum lecturers.
No, I'm not
For
actually
real,
being
oh.
like.
I support you.
You're
I
behaving like
support you.
classicum lecturers because
Right.
class
Oh
on
wait,
Friday.
I want to ask. Is it that
Yeah,
we're just doing this class for like the theory
from
aspect? You now want to teach us practical aspect or what?
yeah, you actually have your practical aspect, which is like basically where the whole which currently is currently happening with the whole 100K to 20 million count. Like that's what we are currently doing in that group. So everything we are doing there is just taking trades, and I'm also, as much as I'm calling that trades, I'm also trying to build. I know Agosian sometimes gets scared. I know what's her name again? Tolu gets scared. And then I'm also trying to just, when I send those signals, when you see your money reading in front of you, you're building that psychology. Okay, that's practical. You're having a live connection with a live account, and then you're just trying to just build it. And you understand? So the rest of the whole thing will just be left to you to practice. You just have to practice, 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 and practice. I've taught, let me see, I taught everything in the beginner course. Yeah, let me share
Um,
my screen.
sorry, Daniel, what will be the mode of the examination? Like, what's the
It will be online actually. There will be
like
a
what's it's like CBT or I
uh,
don't know.
it's going to be CBT really, and then it actually require you to make explanation, video explanation of
Video
certain things.
explanation.
Yes, we
Video
are doing
explanation, okay.
Daniel, see, I'm not ready. Oh. Let me talk about
Me,
that one
Sef, I'm
because
not ready.
I just started class
For me,
when
I'm not
I'm
ready.
still even trying to understand.
Can we make
the
the?
thing.
Can you teach us like for like 2 weeks more? Then we do the exam. Then I'll be ready.
Or even if we have back to back classes this week, then we'll now have
Okay.
even last to come. They used to give time
I mean, yeah, it's okay. Are you guys there? All right. So
Yes, yes.
now,
for revision now.